Ladies and gentlemen, good afternoon. For those of you who do not know me, my name is Kalina Shukarova Savovska, and I'm a Senior Financial Management Specialist at the WorldBank Center for Financial Reporting Reform, here in Vienna in Austria. It is my pleasure to welcome you to this distance learning event with a focus on fraud, which you collectively identified as a topic of your interest for this virtual workshop. Arman Vatyan, Financial Management Sector Leader for Central Asia and ECA Public Sector Accounting Window Manager for the World Bank, and leader also of the PEMPAL Internal Audit Community Practice, is joining us from Saudi Arabia. Arman will co-moderate today's event together with me. We also have here in Vienna Piotr Pizziak, who is a familiar face from the Internal Auditing Training of Trainers program. This event is organized under the Strengthening Accountability and the Fiduciary Environment SAFE Trust Fund, and it is made possible with the generous financial support of the Swiss State Secretariat for Economic Affairs, SECO, and the European Commission, with the aim of improving public financial management in Europe and Central Asia region. Let me spend a few minutes talking about the objective and the agenda of today's workshop. So, large corporate scandals and frauds have shaken both the private and the public sectors over recent decades. The negative effects of these frauds are significant but difficult to quantify and measure. Their impact is often damaging, both financially and reputationally, to organizations. Frauds are often very difficult to uncover. Despite increased fraud prevention and detection methods, many frauds still are only accidentally discovered and are going on for prolonged periods of time. Organizations are increasingly focusing on fraud and are amplifying their efforts to address these fraud risks. More than ever, organizations are focused on establishing appropriate risk assessment processes and plans and implementing fraud awareness programs together with prevention and detection measures. Today, we have two distinguished speakers who will talk to us on the topic of fraud. Let me announce Daniela Dănescu, who is a senior consultant with Interim Audit Management Consultancy. Daniela is an international trainer and speaker in the field of internal auditing, governance, risk, and compliance issues, and is an experienced internal auditor with over 20 years' experience in public sector internal audit. Daniela has co-authored and contributed to numerous articles and publications in the field of internal audit and is the Global Institute of Internal Auditors guidance contributor for the public sector and a team leader for the Global Institute Relations Committee. We also have with us today Stephan Magora, who is an internal audit director at Credit Suisse. Stephan brings more than 15 years of experience in various industries, including financial services. Stephan specializes in IT, data strategy development, big data, data analytics, data governance, and in other similar fields. Let me give you a few updates and technical notes before we begin with the presentations today. So participants are joining either via WebEx connection or VC connections. VC connections with the following venues are available. We have Albania, Tirana, Bosnia and Herzegovina, Sarajevo, Kosovo, Pristina, Macedonia, Skopje, Montenegro, Podgorica, Ankara, Turkey, and Serbia, Belgrade. We also have with us Arman, who is connecting from Riyadh, Saudi Arabia, and we also have a few participants joining us via WebEx from Riyadh, Saudi Arabia. In order to have a successful session, let me ask that you make sure that the microphones are turned off while you are speaking, while you are listening to the presentations. Participants joining via WebEx should make sure that the mute button is on. In case a site is dropped off during the session, please redial to join if you are joining through WebEx, or seek IT support at your WorldBank venue if you are joining via a VC connection. Without further ado, let me now pass to our first speaker, Daniela Dănescu, who will be delivering a presentation first. So Daniela, let me hand over to you, and I'm putting up your slides.
Thank you very much, Kalina, for the nice introduction. Hello, Arman. Hello, everybody, and thank you very much for attending our session today. We have a very hot topic, internal audit, a tool to mitigate public sector fraud is my theme today. So the fraud is illegal and never justifiable, and despite our best efforts to fight fraud and abuse, it is still present in every organization, costing millions in terms of lost financial and physical assets. For example, only in the UK, every year, fraud costs public services about £21 billion. This represents a huge amount of public money that is misused. Fraud affects all organizations and all departments, the most significant losses being, for example, fraud against the tax and benefit systems accounts, procurement, and grant fraud. Fraud can be prevented by implementing a zero-tolerance culture, a strong top at the top, better coordination of efforts. Today, I will try to address the key elements needed for auditors to play successfully their role in preventing and detecting fraud and ultimately reducing integrity violations. Next slide, please. So I will start with fraud risk awareness introduction, reviewing the governance, risk management, and controls briefly, an example of brainstorming fraud risk scenarios, and the internal auditor's role in detecting, preventing, and monitoring fraud risk and addressing those risks in audits and investigations. Next slide, please. Next slide, please. Internal auditing, what is it? If we have a look at the definition of the internal auditing as is provided by the IA, we see the role auditors play, including in preventing and detecting fraud, are two roles. The first one is an audit role. So auditors as independent bodies are in charge of giving assurance on the regularity and legality of the operations and accounts of audited bodies and on the proper functioning of system in line with specified requirements. And the other role is an advisory role, so auditors may make recommendations to improve or correct weaknesses or failures in operations, accounts, and systems. This may include contribution to adapting the legislation. The second part of the definition is about GRC, so internal auditors must be proficient in each of these three areas: governance, risk management, and control. And the internal audit activity must determine the best way to accomplish the activities in these three areas. Next slide, please. So what is fraud? While many definitions exist, the IA defines the fraud as any illegal act characterized by deceit, concealment, or violation of trust. So the definition captures the characteristic that makes it unique among risks: intent. So fraudulent acts involve people that intend to circumvent controls or exploit weaknesses of the organization. Because laws vary, the legality of a fraud act may be questionable. For example, a multinational organization headquartered in a country where an act is illegal may conduct business in other countries where the same act does not violate local laws. But not matter the legal distinctions, the purpose of a fraud risk assessment is to identify the potential for trust violations, exploitations of weaknesses, and circumvention of controls. The ACFE, so the Association of Certified Fraud Examiners, developed the fraud tree with three primary categories of internal fraud, or as known well as occupational fraud. So asset misappropriation, corruption, and financial statement fraud are the three categories identified in the fraud tree. Next slide, please. But why do people commit fraud? So Dr. Donald Cressy, criminologist, developed the fraud triangle to explain why trusted persons become trust violators. So three factors are consistently present when people commit fraud: pressure or incentive, perceived opportunity, and rationalization. The first leg of the fraud triangle represents pressure or incentive. This is what motivates the crime in the first place. So some examples of pressures, actual or perceived need that provides a reason or motive that commonly lead to fraud, include personal struggles or external stressors like financial problems, health issues, or addictions. And even nowadays, computer hackers who commit fraud intending to show off their capabilities rather than to cause harm. The second leg of the fraud triangle is the perceived opportunity, which defines method by which the crime can be committed. Opportunity is a combination of circumstances or conditions that enable fraud to occur. So some examples are poor control design, lack of controls, insufficient security or segregation of duties, or other circumstances that can enable a control failure. A level of trust, authority, or knowledge, or access to control processes that enables personnel to circumvent or override existing controls, or even inadequate supervision, training, or communication regarding policies and professional conduct and the consequences of violations. The third leg of fraud triangle is rationalization. The vast majority of fraudsters are first-time offenders with no criminal past. They do not view themselves as criminals. So rationalization is a concocted, convincing, or plausible justification, such as excessive unpaid hours worked or a rewarded performance. Belief that actions are acceptable because others probably do it too, or that actions are acceptable because they are culturally commonplace. Of the three factors, the opportunity is the only one that organizations can control directly. Management can design internal controls to try to prevent opportunities for fraud and to detect fraudulent activities if they occur. Internal auditors should note that those who engage in fraudulent activities may rationalize fraud not only for their own benefit, but also for the benefit of their organization or an external individual or organization. So fraud committed to benefit the organization is usually executed by exploiting an opportunity to gain an unfair or a dishonest advantage through deception of an outside party. However, even when employees use such a rationalization, they typically receive an indirect personal benefit, such as the achievement of a performance target, a financial reward, even a promotion. Next slide, please. Here are some examples of fraudulent acts important to stimulate awareness of potential fraud risks characterized by type of rationalization. And here are the examples of fraud committed for the direct benefit of an individual, which include embezzlement, theft, even acceptance of bribes or kickbacks. Next, please. Here are examples of fraud that benefit the organization directly, like misrepresentation of financial or non-financial data, particularly in mergers of acquisitions. Business activities that violate government statutes, regulations, or contracts. And next, please. Public cost of fraudulent practices. So the most common fraudulent practices in public sector are undue use of subsidies, fraudulent management of public interest, suspicion of fraudulent management of public interest in the context of allocation of mandates to third parties, bias recruiting, etc. And they are not only costly, but are also damaging the image of the community and its services. Therefore, it is important to implement measures to prevent these fraudulent practices from recurring, such as protection of whistleblowers, as well as examples of specific key controls that are vital to the overall internal control systems of the public entities. Next, please. Fraud in the public sector. This is a PwC survey conducted last year in the public sector in the UK. One important conclusion is that zero tolerance does not always mean zero tolerance. Next slide, please. The survey shows that organizations are always reluctant to bring charges against employees because of the time and costs associated with developing a case. The fraud is most likely to occur if tone at the top is not right. Many times trust among employees and volunteers is considered an adequate control, and this is a fallacy that can create affinity frauds together with the tone at the top that is not right and toxic culture. It is important that leadership walks the talk. So if the leadership is saying one thing and doing another, the rest of the organization lose confidence in their leadership and has a complete impact in the accountability, profitability, and everything. So toxic cultures can also lead to wrong group thinking. When everyone else thinks this is acceptable, then must be acceptable, even if you feel like probably not. But if everybody does, then perhaps I am the one who's wrong. So that may lead to individuals make judgment errors in what they should do in specific situations. That's a symptom or a result of a toxic culture because lead to unethical and illegal behavior. Because things will happen in the organization. So the most critical thing is how to deal with that unethical or illegal behavior. For example, if it is a message there that some individuals in the organization were allowed to get away with things that others were not. Next slide, please. And now let's follow the available guidance provided by the IA in preventing, detecting, and reporting fraud. Next, please. Talking about fraud risk awareness, so the first auditor's responsibility related to fraud is being sufficiently knowledgeable to notice fraud opportunities and indicators of fraud, and requires knowing the definition of fraud, being able to identify the types of fraud most likely to occur in a specific audit client, and being able to assess the client's level of vulnerability, so the fraud risk, and also knowing the symptoms of fraud, the red flags. Next, please. The IA Code of Ethics. Here we talk about guidance to promote an ethical culture within the organization. We talk about integrity, honesty, competency. So how do we mitigate organizational culture risks? Some of the things that are much more familiar with and much more comfortable with, I will add, are the hard controls. The code of conduct and the code of ethics that most of the organizations have or should have, human resources and policies and procedures, what types of things are outlined as unacceptable within human resources policies manuals. Any other type of compliance or rules or policies that define appropriate behavior within the organization. Perhaps even the way the organization is structured, what departments report where. perhaps even in some cases, how the organization is set up from a regional or a department basis. We need to get also into some more soft control areas. These are the areas which we are going to have to use our judgment. There is not going to necessarily be back on black of white evidence that you will be able to pay some opinion on. So these are things like the competency of employees. It is vital to reinforce code of conduct and ethical behavior standards, including the DIA's code of ethics for internal auditors. Another example of code of ethics is the one of Intosai, which with very similar requirements, but with a difference is calling for political neutrality. And next slide, please. Public sector integrity services. So auditors play a key role in responding to integrity violations, which include fraud, waste, irregularity.
Daniela, hello. We are losing your sound. Daniela, can you hear us?
Legal acts, non-compliance, which
Daniela,
the
sorry
possibility
to interrupt.
of integrity violations should be considered when planning audits and developing audit tasks, so there is reasonable assurance of detection. However, because determining abuse involves considerable subjectivity, auditors are not generally required to provide reasonable assurance of detecting abuse. If an integrity violation is suspected or detected, before reporting to management, auditors should attempt to determine the extent of management knowledge of or involvement in the violation, like collusion, for example. And if we think about an example of fraud and corruption in public procurement, because a great part of public spending is handled in public procurement, this government activity is vulnerable to waste and represent a high risk area. Internal auditors as well as procurement staff need to be well prepared to identify the warning signals and to properly document, monitor, and audit procurement procedures. Next, please. Integrity violations policy. A written policy should describe specific responsibilities of management, staff, and auditors in preventing, detecting, and reporting integrity violations. The integrity violations policy should be developed based on input from the CEO and the heads of fiscal information processing, legal and security departments. Integrity violations policies should do the following main important things. State management position against integrity violations. So the organization should make it clear that integrity violations will not be tolerated and that perpetrators will be prosecuted. Make all employees responsible for reporting integrity violation. This will help alleviate any fear employees may have about retaliatory actions against whistleblowers. The policy should specify how employees should report integrity violations, like direct notification of legal counsel. The policy should also describe how due process will be served, including the specific rights of accused employees, so some of them will be cleared. The policy should specify what types of action will result in reprimand, termination, or other consequences. Next, please. And a standard to government audits related to fraud. Governmental auditing is distinctive. The standards that apply specifically to government audits of fraud are listed here. Those standards contain similar principles but have some conceptual differences. So, for example, we have to separate the US government accountability office standards applicable in the states where the auditors are investigating the fraud matters. Next, please. Governance. So governance is the exercise of authority, direction, and control over an organization. In the public sector, it can be achieved by ensuring transparency, accountability, and ethical behavior in government. Next, please. Good governance exists when governing bodies are prepared to ensure that organizations' objectives are met and that performance is satisfactory. Next, please. Governance within standards. So internal audit responsibilities in ensuring effective governance are to perform assessments to provide assurance the governance structures and processes are properly designed and operating effectively, and to provide advice on potential improvements to governance structures and processes. And how is the governance addressed by the standards? So if we start with the questions, how does the organization's governance structure support its ability to create value in the short, medium, or long term? Or we are assessing if governance addresses significant compensation policies and practices. So the relevant standard is 2110. The internal audit activity must assess and make appropriate recommendations for improving the governance process. If governance addresses leadership structure and practices, the relevant standards are the first and the second governance assurance standards. So let's talk about an example on ethics, on the system of moral values in procurement again. So promoting an ethical culture in procurement. It refers to the responsibilities of the organization beyond the duties imposed by laws and regulations. So an ethical basis for procurement can be established by organizational decisions that seek to guide managerial and institutional conduct. And again, is referred in the first assurance standard. The formalization of an ethical procurement policy or code of conduct is the first step. Equally important is the communication of the policy to employees and even third parties. Employee training courses on ethics can also support the ethical foundation of procurement, and acceptance of the ethical policy can be made a condition of employment. Following the development and communication of an ethical procurement policy, the next crucial step, of course, is the rigorous implementation of this policy. Next, please. Internal audit is uniquely situated within the organization to provide insight on and support the implementation of policies and procedures, to report on the design and the effectiveness of the internal control structure. So here is the internal control framework provided by Intosai based on COSO model. Some objectives are named differently, so maybe you recognize reported became accountability, and strategic objective became safeguarding resources. If we refer to control environment, often called tone at the top, is focused on whether management at all levels, including the top, has shown a strong interest in supporting internal control. So if the internal control environment is deficient, the remaining four, risk assessment, control activities, information and communication, and monitoring, will not be effective. So for example, in the early stage of an audit, the auditor assesses the control environment, so the management's attitudes and actions regarding control. So he or she is collecting information, general information, top-level management statement, pro and con the internal control, the code of ethics, policies on recruiting, retention, and training, reporting relationships, the agency's relationship with central government agencies. So if the control environment is ineffective, it can negate the other four interrelated components referred in the framework. Next, please. And in the monitoring, phase, there are the assessment of control systems. So here appear the audit. So ensuring the controls are working as intended and reports are sent to appropriate levels, so the needed corrections occur. Next, please. Now let's see risk management and control within the standards. So we have the opportunities and risks here. At the very first question we can ask is what are the specific opportunities and risks that affect the organization's ability to create value over the short, medium and long term, and how is the organization dealing with them? So the relevant standard here is 2120 risk management. The internal audit activity must evaluate the effectiveness and contribute to the improvement of risk management processes. If risk management addresses key opportunities and risks that and the availability of relevant capitals, here relevant is the first standard assurance or risk management. If risk management and opportunities addresses specific sources of opportunities and risks, assessment of risk and steps being taken to create value or manage risks, the relevant standard is the second assurance risk management. If risk management addresses avoidance of boilerplate disclosures, inclusion of practical information and requirements for specific disclosures, like in contracts and grants, the relevant standard is the first consulting risk management standard. And finally, the second consulting risk management standard, for example, is relevant if risk management addresses the approach to risk fundamental to the ability of the organization to create value. Next, please. So this is the new COSO framework integrating with strategy and performance, just released in June this year. And you can see here the first pillar is governance and culture. So governance sets the organization's tone, reinforcing the importance of and establishing oversight responsibilities for enterprise risk management. Next, please. The IA fraud-related standards. So while management with board oversight holds the primary responsibility for establishing and monitoring effective controls to deter and detect fraud, the internal audit activity is required to evaluate the risk of fraud according to the international standards for the professional practice of internal auditing. Additionally, the Chief Audit Executive must report significant risk to control issues, including fraud, to senior management and the board. And this is the standard 2060, reporting to senior management and the board. The standards require the internal audit activity to assess fraud risks at the organizational and engagement level. To ensure adequate review of the risks relevant to each engagement, internal auditors should conduct a fraud risk assessment as part of engagement planning. And here is the first standard in assurance 2210. Over time, the knowledge the internal audit activity obtains during individual engagements can be compiled into a more robust and comprehensive organization-wide fraud risk assessment. Assessing the potential for the occurrence of fraud when planning each engagement is important because new fraud risks can arise at any time. Therefore, internal auditors must consider the probability of fraud when they develop the objectives of each engagement. So here is relevant the second assurance standard 2210. Performing a fraud risk assessment at the start of an engagement enables internal auditors to discover fraud risks that may not have been present when the organization-wide risk assessment was last updated. Additionally, fraud risks that may be insignificant at the organizational level may achieve significance in an individual area or process. When assessing fraud risks, internal auditors are expected to exercise due professional care, and here relevant is standard assurance first 1220, and also they should maintain an impartial, unbiased attitude, standard 1120, individual objectivity. Internal auditors also exhibit professional skepticism, because the critical assessment of the area or process under review is essential. Next slide, please. Engagement planning. So the exact process of incorporating a fraud risk assessment into engagement planning may vary according to the needs of the organization, the internal audit activity, and the individual engagement. However, the process generally includes the following steps: gather information to understand the purpose and context of the engagement, as well as governance, risk management, and controls relevant to the area or process under review. Brainstorm fraud scenarios to identify potential fraud risks. Assess the identified fraud risks to determine which risks require further evaluation during the engagement. If we refer to gathering information, so to identify fraud risks in the area or process under review, internal auditors should understand the organization and the larger context in which it operates, like legal, political, social, economic, market, industry, and cultural environments. Additionally, internal auditors must understand the strategic and operational objectives of the organization and how they align with the objectives of the area or process under review. And here is relevant this standard 2200 engagement planning. To attain this insight, internal auditors should seek information from an array of sources, including prior assessments and investigations, formal reporting mechanisms and interviews, a preliminary review of the control environment, external research and specialists. Next slide, please. And the DIA standards requirements for the assurance engagements. The organization-wide risk assessment, which documents the significant risks identified at the organizational level and forms the basis for the annual internal audit plan in accordance with requirements of First Assurance Standard 2010. This is a good start pointing for identifying risks that could be relevant to the area or process under review. Assessments centered on fraud risks only, whether organization-wide or limited to the area or process under review, may also be useful sources of information. Internal auditors should review relevant risk assessments and fraud investigations performed recently by the management of the area under review and other providers of assurance and consulting services, both internal and external. Next slide, please. An organization's personnel can provide useful information about fraud risks. In fact, the Association of Certified Fraud Examiners reports that regardless of the size or type of organization or whether a formal reporting mechanism exists, personnel are the source of more than 50% of fraud tips, the most common way to detect fraud. And notably, the internal audit activity was identified as the second most common method of detecting fraud. Many organizations have established formal mechanisms like whistleblower hotlines, online forms, or email submissions to facilitate the reporting of suspected fraudulent acts and internal control weaknesses that could expose the organization to fraud risks, like allegations of waste, abuse of authority, misappropriation of assets, collusion, and other unethical or suspicious behavior. If a formal fraud reporting mechanism exists, internal auditors may ask the individual responsible for its management to provide access to any information pertinent to the area or process under review, such as recording phone calls or documented statements. Next slide, please. Preliminary review of control environment. So formal reporting mechanisms and interviews often expose issues related to organizations' control environment that could lead to fraud. Additional red flags may be discovered through a review the elements of the control environment, such as organization structure and ethical values, as well as management philosophy and operating style. An assessment of the control environment should include evaluating the maturity of the control environment and the effectiveness of relevant controls. The assessment may reveal potential behavioral drivers and/or pressures that could lead employees to rationalize committing fraud. For example, personnel may express awareness of performance pressures or concerns of unrealistic goals that individuals could use to justify fraudulent behavior. Next slide, please. Proficiency, standard 1210. External research and specialists. Internal auditors are not required to have the expertise of the specialized fraud investigator. However, they must have sufficient knowledge to evaluate the risk of fraud and the manner in which it is managed by the organization, and relevant is the second assurance standard 1210. Internal auditors can gain such knowledge by researching frauds that have occurred in similar organizations or industries and studying fraud trends. In addition, internal auditors can use benchmarks to compare the fraud risk management practices of the organization and the area under review to those of comparable and/or more mature organizations. Knowledge can also be acquired by reading relevant publications, keeping current with changes in regulations, and attending conferences and trainings. The third assurance standard, 1210, the auditor should take into account the risks arising from the use of sophisticated IT, electronic database, electronic procurement, data analytics, etc. So think about privacy and confidentiality matters. Think about service interruptions or the loss of information. Next slide, please. Brainstorming fraud scenarios. Based on the information gathered, internal auditors can begin contemplating potential fraud scenarios and fraud risks relevant to the area or process under review. Brainstorming fraud scenarios is an effective way to determine the characteristics and circumstances unique to the specific area or process under review that may produce opportunities and incentives for fraud. The information gathered during brainstorming sessions could be used to develop a list of fraud scenarios and fraud risks in any auditable area or process. For example, in this table is presented fraud scenario and the corresponding risk that might be identified during a brainstorming session for an accounts payable assurance engagement. Next slide, please. Assessing fraud risks. Because the engagement cannot cover every risk, internal auditors assess the significance of the fraud risks that were identified during brainstorming to determine which risks should be evaluated further during the engagement. An effective way to perform and document the fraud risk assessment is to create a fraud risk matrix listing the fraud scenarios and relevant risks, and then expand the matrix to include measures of significance. This table depicts how the fraud scenarios could be expanded to include the impact and likelihood risk ratings. Assessing impact can be complicated because it involves both quantitative and qualitative factors. So internal auditors should account not only the financial, operational, or regulatory impact of the potential fraud risks, but also the non-financial impacts, such as damage to the organization's reputation, or relationships with customers or vendors. For example, a fraud risk with an immaterial direct financial impact to the organization could still greatly affect its reputation and therefore may be categorized as high impact. Next, please. The Heatmap. Factors to consider when assessing likelihood include past fraud allegations or occurrences, prevalence of similar frauds in the industry, and the complexity and number of people involved in the process. So the risk rating from the fraud risk matrix can then be represented on a basic graph like a heat map. So by plotting this risk impact and likelihood along the axis, internal auditors clearly depict the risk overall significance or priority, where red color denotes the highest priorities and the yellow risks that are not significant. Based on the completed heat map, internal auditors can easily visualize the significant fraud risks that could or should be included in the engagement for further testing. So in the table is shown the fraud risk matrix adjusted to reflect only the prioritized fraud risk in the accounts payable engagement example. Internal auditors can provide management with the identified risks to be considered for inclusion in the organization-wide risk assessment. If this information discovered during the fraud risk assessment indicates a potentially fraud act, internal auditors should follow the established protocols for internally reporting and investigating fraud allegations. So typically, internal auditors report the concern and preliminary evidence to the chief audit executive, who then decides whether the issue needs to be escalated to senior management and or the board. Next, please. Identifying controls. After internal auditors have considered fraud scenarios and identify and prioritize the fraud risks, they should determine which controls, if any, are in place to mitigate those risks. So here is the matrix including the existing controls. The heat map and the fraud risk and control matrix should be included in the engagement work papers because they support internal auditors' decisions about risk significance. The information from the matrix is then incorporated into the preliminary risk assessment used to establish the engagement objectives and scope in conformance with Standard 2330 documenting information. Next, please. Here are practice guides related to fraud developed and recommended by the IA. They are not mandatory, but strongly recommended. Next, please. And methods for the identification and investigation of integrity violations. Next slide, please. The factors in identification and investigation of integrity violations, fraud, illegal acts, waste, irregularities, and or abuse, include interrogatory interviews, identify and evaluate controls to prevent and detect integrity violations, design audit procedure to detect integrity violations, appropriate steps when integrity violations are first suspected, and standards for reporting followed by the investigation. So auditors generally are not expected to be skilled investigators, but they are often asked to assist in investigative work. These public sector auditors are expected to have a solid knowledge of general issues surrounding investigations and to recognize possible integrity issues. Next, please. Interrogatory interviews may be of witnesses, informants, and or suspects. So you have to have clear objectives, to watch reactions, to listen, to use common sense. There are two major types of questions, open-ended and closed-ended. You look, of course, at their body language, like nervous gestures, closed posture, lack of eye contact. Document interviews. If not approached carefully and with integrity, the investigation may encounter barriers in judicial procedures if they occur. At dealing with uncooperative interviewees, so one option is to suspend the formal interview and, of course, use correct procedures. So, you know, with the European Commission, we have OLAF. So the moment that we have a suspicion of a fraud, we give it to OLAF. But it's not everywhere like this. In other countries, internal audit is also dealing with that, already mentioned, for example, in the US. So the OLAF is the European Anti-Fraud Office that investigates fraud against the European Union budget, corruption, and serious misconduct within the European institutions, and develops anti-fraud policy for the European Commission. Next slide, please. Controls to prevent and detect integrity violations. So an effective system of control is the most important deterrent an organization can have against integrity violations. Auditors are responsible for testing and evaluating internal control systems to ensure that adequately discourage undesirable employee behavior or actions. Some key points in this regard are do professional care that requires auditors to be alert to possible wrongdoing, fraud, errors and omissions, inefficiency, waste, ineffectiveness, conflict of interest, possibility of material irregularities or non-compliance. Some areas auditors can consider when evaluating controls to prevent and detect integrity violations include the following. Management of the entity should have a positive attitude towards internal controls. So in addition to establishing a system of internal controls, management is responsible for communicating what the controls are and the importance of following them. The likelihood that integrity violations will occur increases when employees perceive that management does not take controls seriously. The entity should have written policies like code of ethics or fraud policy that describe codes of conduct and prohibited activities, as well as how integrity violations would be handled if detected. There must be information mechanisms like computers and telecommunication that should ensure that the information they supply to management is adequate and reliable. The entity should have proper screening policies for employees, vendors, and contractors. So whether the employees are screened, of course, you screen them when they were coming to the organization. In fact, you should do it in an ongoing basis, but privacy laws do not allow us to do that. Auditors should communicate to management any recommendations for establishing additional controls or enhancing existing controls. Next slide, please. Detect integrity violations. So here you need to know what are the red flags. Employee management, cash and accounts receivable, payroll, purchasing, and inventory are some important areas to look for red flags. So what is the potential loss? Who is involved, because it can be more than one person. You have to prove the intent, because fraud is only there if is intentionally. So an error is not a fraud. You have to think about recovering the loss, but also about improving the controls at the end. Next, please. And here you have your procedures, physical, testimonial, secure the original records. So never confront a person, a suspect, with an original document, because I experienced that person when you ask him, is this your signature on the check? And they look at it and they start to eat the check to make it disappear. So never show an original, you work with copies. For instance, about the unannounced surprise checks. An auditor, as an auditor, you are always open and you announce you're coming, except when you are looking for fraud cases. So for a cash count, if you go to the branch and you want to count the cash, you are not going to tell them, I will come next Monday. It's a surprise because you want to make sure if the cash, the physical cash corresponds with the accounting cash. And this you can only do by surprise. And to detect, you look, for instance, for duplicate payments. Are there payments made to the same supplier in the same short period time? Or you can look for suppliers who have the same address as a member of the staff. Next, please. If the fraud indicators suggest that integrity violations occurred, a formal investigation may be warranted. Based on the nature of the potential violation, auditors, lawyers, investigators, security personnel, or other specialists from inside and outside the organization may be assigned to the investigation. So you have to assess it like just like a normal audit, but you have also to coordinate because I want to have in my team somebody from internal audit because they know the internal control system, somebody from security because at the point of the time I will want to close the access of that person that is suspected so he cannot destroy the evidence. And you need maybe somebody from legal to know how far you can go and what you can do. After the investigation is concluded, auditors should take steps necessary to prevent similar violations from occurring again. So this can be achieved by determining if additional controls are needed or if existing controls should be strengthened. Appropriate audit tests should be included in future audit programs to test for similar violations. Next slide, please. Reporting. So reporting considerations are necessary from the time of initial concern to issuance of the final report, and proper communication is needed at all stages of the investigation so that when concluding that a violation occurred or may have occurred, the auditor should notify management at the right level immediately and determine the possible fiscal impact of the violation. Write a report that describes findings, conclusions, recommendations, and corrective actions. Consult with legal counsel as necessary regarding the proper handling of evidence, the sufficiency of evidence, and other matters. Additionally, you can send a draft of the proposed report to legal counsel for review before it is forwarded to the management. And typical report is fairly detailed. I remember a case here. So in an investigation of the chief judge of an adjudicatory body, the final report includes more than 400 endnotes, 400. So this is indicative of the level of detail that may be included. So the chief judge had many allegations against this person over the years, but he survived. So the investigator needed to very thorough support to make the case against him. So to summarize the reporting, when you have a conclusion, is like your other audit reports, except you know that if the organization decides to go to the court, you have also to talk to legal. So, okay, what you can put in the report, what not, because if you obtain your evidence in a way that was not in conformity with privacy law, you cannot use it in court later on. Next slide, please. So auditors' role in fraud prevention is just to remember here some areas where auditors can assist in fraud prevention activities, because later on we have a checklist for fraud prevention. Next slide, please. And takeaways: internal audit is a valuable tool to mitigate public sector fraud, and has a critical role as a third line of defense in our organization, in their unique position, not only to fight against fraud and abuse, but also to support the efforts of other stakeholders who should also be fighting fraud. And beyond this primary role towards risks, audit is a key function in the process of never-ending improvement. However, the risk of fraud can be reduced through a combination of prevention, detection, and deterrence measures. Next slide, please. And here is the fraud prevention checklist. So the Chief Audit Executive should never be reluctant to ask questions about fraud, conducting timely and appropriate discussions about fraud with all levels of the organization, including the audit committee, demonstrates that the internal audit activity is taking a proactive role in this area. Some of the many questions that the Chief Audit Executive should be asking about fraud on a regular basis include: does the organization have a fraud governance structure in place that assigns responsibilities for fraud investigations? Does the organization have a fraud policy in place? Has the organization identified laws and regulations related to fraud in jurisdictions where it does business? Does the organization fraud management program include coordination with internal auditing? So the most cost-effective way to limit fraud losses is to prevent fraud from occurring. This checklist is designed to help organizations test the effectiveness of their fraud prevention measures. Next slide, please. So here are the detailed questions with possible items you have to just to check on it. So I strongly advise you to use it. Next slide, please. So thank you very much for your attention, and I'm looking forward for our questions.
Thank you very much, Daniela. You have provided quite an extensive information and comprehensive presentation, and this is mainly targeted for trainers. I think that will be useful for further reference. I will start with one question: is establishing audit committees and boards with oversight role hasn't been effective fraud management for fraud management practice for private sector companies. Such committee with responsibility to oversee management, identification of fraud risk, and implementation of anti-corruption measures, as well as supervising of internal audit function, proved to be quite effective in the private sector. Could you please let us know what's the role of the audit committees is with this, what is their role, evolving role in the public sector to tackle the fraud risk, and share some European perspective in this regard? Thank you.
Thank you, Arman, for this interesting question. We see indeed public sector institutions are more and more focused on fight fraud and abuse, and consequently the increasing trend of establishing audit committees within the public sector to tackle the fraud risk. For instance, in the Netherlands, the number of audit committees are set up at the city level, and for semi-public sector, such as universities, healthcare, building societies. In these sectors, fraud is in focus because it has a high reputational risk. At the European level, emphasis is given to performance as a key achievement, included in the priorities of Mr. Jean-Claude Juncker, the chairman of the European Commission. So why managers need measures of performance? Because they are accountable, and auditors in fact need to do this when they go for a performance audit. And why measure performance? In fact, because this is the focus of current Commission, performance both for the managers and for the auditors. This is also why a big majority of audits in the internal audit services of the European Commission are focusing on performance. That does not mean that they neglect compliance. Consequently, a lot of developments are currently underway at the European and national levels with regard to the new roles the supervisory boards or the audit committees existing or new established should play at the national public sector level. A good example here is the enactment of a law to establish internal audit committees with supervisory role within central public sector institutions in Romania. The Central Harmonization Unit for Public Internal Audit Functions within the Ministry of Finance provides a model charter for an audit committee and provides oversight on matters of financial reporting, auditing, risk management, and internal control. So the Internal Audit Committee should review the uniform application of the risk matrix in the planning process in relation to the adopted approach, like structures, domains, activities, processes, programs, etc. This includes, of course, fraud, ensuring prioritization of audit engagements in relation to substantiation elements, allocating audit resources to areas with high risk, included fraud risks, contribution to the improvement of internal control systems, analyzes whether the professional training of internal auditors has been made in relation to the needs of internal auditors and compliance with specific legal requirements. So training should include knowledge and skills to detect fraud. A good example also as best practice is the updated model of internal audit activity charter provided by the IA this year in March, that states that the Chief Audit Executive shall report periodically to senior management in the board or the audit committee regarding significant risk exposures and control issues, including fraud risks, governance issues, and other matters that require the attention of the audit committee, and any response to risk by management that may be unacceptable to the organization. And one last example I would like to give here is I recommend as best practice also the Dutch Corporate Governance Code, updated in December 2016 to brought in line with the current practice. The code is focusing on the governance of Dutch listed companies and provides guidance for effective relationship between the management board, the supervisory board, and the company stakeholders. So the most important change is the central role given the long-term value creation. Many of the incidents of misconduct that have occurred over the past years, such as accounting fraud, corruption, and cartel activity, can be traced back to a business model that focuses too much on achieving short-term gains. So the achievement of value creation is linked to the culture within the company. Management board and audit committee members are expected to create, by communicating, a culture which promotes desired behavior and encourages employees to act with integrity. A healthy culture can reduce the chance of misconduct and irregularities. It remains important, however, to be alert to signs of such conduct or irregularities. Thank you.
Thank you, Daniela. And just before opening for questions, you shared like a typical risk flags and the red flags indicators. Could you please, those are probably relevant for private sector and public sector. What are the specific, most common red flags or indicators of fraud indicators in the public sector perspective?
Oh, this is again a very interesting question. So the current view of fraud risks aims to manage fraud risk politically and proactively. So the fight against fraud is seen as an important or very important matter by all sectors. But the public sector is not in line with other sectors like services and industrial sector, as the approach may still be perceived as emerging. For example, auditors should be aware that the concept of materiality and significance take on different meanings in the public and private sectors. So issues affecting public accountability, equity, and stewardship may have a greater impact and a direct one in the public sector. So for example, if a manager of a very controversial program may have stolen only 200 euro, but the controversy and public accountability aspects might make the amount not significant, but the fact where it would not be material in the private sector financial statement opinion audit. So therefore, during the planning and reporting processes, government auditors may need to consider quantitative factors such as the visibility or sensitivity of the program under audit, or the newness of the program or changes in its conditions. Some examples of red flags that can be the first indication that an integrity violation is occurring are the main occurrences in public sector are the undue use of subsidies, fraudulent management of public interest, use of public material and labor to private ends, requests for commissions, suspicion of fraudulent management of public interest in the context of allocation of mandates to third parties, bias recruiting, and bias criteria in tender offers. And here I'm back on my favorite subject, procurement red flags, let's say conflict of interest. So for example, typically vulnerable point in the procurement process is the technical evaluation stage, as complex technical details may be manipulated to mislead those without the relevant technical expertise. So a red flag could be conflict of interest and corruption in the bid evaluation process through familiarity with bidders over time, personal interests such as gifts or future or additional employment, no effective implementation of the 4 I's principle. For example, fraud may corrupt the competitive element of the procurement process through favoritism to specific potential vendors, thereby undermining the objective of obtaining best value for money. So concepts of materiality and significance, again, are viewed differently in government, in the public sector, where qualitative factors must be considered, than in the private sector, when the auditors should use their professional judgment to see if the investigation merits the effort. So let's say in the public versus private sector, the facts could be the same, but the decision could be different. So let's say if we have in the public sector a 10 million government program, and the program experienced 0.5% fraud, like 50,000 euro, and the estimated cost to reduce or to eliminate the fraud is 100,000 euro. The decision, so the government institutes the program to ensure accountability of public funds, even to net cost of additional 50,000. So in the private sector, on the other hand, if we have a 10 million revenue generating business and the business experiencing 0.5% fraud, so the same amount of 50,000 euro, and the cost to reduce or eliminate fraud is the same, 100,000. Of course, the decision, so the business will not institute the program after it determines that the 50,000 is immaterial to the financial statements and the cost exceed the benefits. Thank you.
Thank you, Daniela. Now I would like to give a floor to questions, please.
Sorry, I was just going to add to what Daniela says. I think the private sector is moving in this same direction as public sector, right? Because even though, from a material perspective, the numbers might be small, but actually one of the things that we're considering is a cultural element. So yes, you might have misappropriated £50, but actually what does that mean from the culture that we're trying to cultivate within the bank, and potentially some of the reputational risk as well. So I think I think slowly moving towards a position where there is almost zero acceptance of a lot of these misconduct.
Thank you, Stephan. With zero tolerance and acceptance and materiality concepts, thanks a lot. So questions, dear participants, please unmute your microphone, give a question, and then mute it again. Who is coming first? Tirana, Ankara, please. Who would like to go first? Just to unmute your microphone, please.
Hello, Ankara has no question for now. Thank you.
Thank you. Sarajevo. Pristina. Serbia, Ljubinko, you were quite active, please.
Yes. I always have a question. For this opportunity, how internal auditor could keep integrity if he or she is faced with losing job in candidate countries, for example? Oh, thank you.
Thank you. Daniela,
so yes, I don't hear very well, but I understood the question. This is a very sensitive aspect of our works as internal auditors. So there are matters then the management will not agree with us and then we have the chance, the solution to report to the audit committees. That's why the role of audit committees is reinforced now, and new audit committees are established because we need to keep our independence, our objectivity, our integrity when performing our work. So of course will be, and we have examples in real life when internal auditors lost their jobs, but it's an improving process. So it's more and more cases are shown that the CEO is losing the job more frequently than the internal auditor. So we are more and more secure in this side.
Thank you, Daniela. Ljubinko, are you fine?
Thank you. It's okay.
Yep, very good. Thank you. Skopje, Podgorica, Pristina, do you have any question on your side? As participants probably prepare their questions, let's then give the floor to Stephan, as we will also have questions. Yes, please.
From Kosovo, we don't have any questions, so thank you for your presentation. Thank you.
Thank you. Thank you. Then let's give the floor to Stephan. Stephan, please proceed with your presentation, and we will have open for question and answer after following your presentation. Stephan.
Okay, thank you, and good afternoon. Can we just go straight to slide number 2, please? Slide number 2. So, good afternoon, and I'm Stephan Magora. I work for Credit Suisse. I run their global data analytics function within internal audit. I think we're probably one of the first organizations to have an analytic function, and actually the fact that it's global also maybe is a first in the industry. A lot of the things that I'm going to talk about today may be slightly kind of leaning towards what happens in the financial and private sector, but actually a lot of the concepts and a lot of the techniques equally apply to public sector as well. Because I mean, I see that is that when I interact with my colleagues in the UK, in Switzerland, and pretty much all over the world. So I think yes, they are, even including the examples that I'll show later, very much kind of driven from private sector perspective, but they are very applicable to public sector. I'll probably start by, I think, the comment that Daniela made, which is in the UK, I think the cost of fraud is about 21 billion pounds, right? I mean, that's a significant amount of money, right? And also the other challenge that we have is it seems to be increasing, and actually we're dealing with large amounts of data, right? Whether it be in a private or public sector, the number of transactions, the number of expenses, the number of transactions, the number of trades that we do, and on a daily basis is actually increasing. There's so much data out there. I think the challenge then becomes, how can you, I think Daniela was talking about monitoring and actually making sure you got the right controls, but can you practically do that using traditional mechanisms? Can you practically do that using some of the much more manual monitoring and detection techniques? I think the answer that we very quickly arrived at Credit Suisse is no. I think you need some help, right? So this is where analytics comes in. In fact, I mean, I hosted all the financial industry internal audit data analytics functions in the UK, a few weeks ago. And actually, what became very, very obvious is a lot of the audit functions are now leveraging data to evaluate risk, not just fraud risk, but risk across the board. And they're using data and analytics to drive insights. So I think from where we stand, we think data and analytics are actually almost becoming an indispensable element of the way that we do audits. I mean, I work with the Institute of Internal Auditors in the UK here. In terms of one of the things that we're looking at is what is the audit function of the future and the audit professional of the future going to look like, given the challenges of so much data, so much complexity, and actually things moving very, very, very quickly, right? So I think analytics is actually a very, very important tool set. We think it's actually going to be very central to everything that we do. Within my organization, 50 to 60% of the audits that we do today are either driven or supported by data analytics. That's kind of how far we've gone. I'm more than happy to discuss some of the specific details in around how we do that. But there are just some things that we can no longer do without using analytics. I mean, Daniela was talking about expenses. we do on a yearly basis expenses, including executive expenses, so the most senior people in the bank, and that's completely automated. But what we're also doing is we're not waiting until the end of the year. We're not waiting for a point in time in the year to do the audit. We are continuously monitoring if there are any exceptions that actually we should be worrying about and reacting as quickly as we can. So this is kind of where we're going with it. But also, I think for us, fraud is difficult, and I think Kalina opened up by saying, it's not easy to detect, right? It's actually quite difficult. So one of the things I'm going to talk about is some of the techniques that we're using right now to try and detect where potentially things could be taking place that we're not aware of. But it's obviously it's not an easy area. Also, it doesn't make it any difficult, especially for us. I mean, we produce, in some cases, hundreds of thousands of transactions every single day, whether they be payments to, employees, to third parties, to our partners. I mean, there's just so many of them. I don't think it's practically possible to do that manually. Okay, so the things I'm going to cover today, I mean, I've got 4 things on the screen. So I'm just going to kind of reinforce, I think, some of the points, that Daniela said on the fraud triangle. I'm going to give you some statistics. I'll spend more time, talking about some of the examples in terms of the work that we've done. So, kind of point number 3, and then also touch on very, very, very quickly in terms of what we think the audit of the future and the audit function of the future are going to look like. And I'll share some of the things that we're discussing with internal audit, the Institute of Internal Audit in the UK. Okay, so can we move on to the next slide, please? So in terms of the fraud triangle, the only thing I was going to say here, the only thing I was going to say here is, in order for fraud to take place, all those 3 factors have to exist. I think it is actually quite important that we realize that. And where does analytics actually come into play? It comes into play in terms of the opportunity, right? We can reduce the opportunity using analytics. And how do we do that? What we do is we use analytics, and we're doing this, within my organization, to identify areas of control weaknesses, right? Because I think what you can do with analytics and actually quite quickly is be able to join dots. So you can join procurement information, you can join, some of the, payments, and actually very quickly see where potentially there are areas that you should be focusing on. And once you find that there are weaknesses, then it's easier. You probably, should try and reinforce your controls or create new controls that are a lot more effective, right? So what we target is absolutely the opportunity to try and reduce the opportunity, or in some cases actually eliminate that opportunity as well, right? The other one, which is slightly much more kind of controversial, and again, I think Daniela spoke about the pressure, which is, the top factor at the top. We think actually analytics could help in that area as well, but this is dependent on how much data, or if you're allowed to access data. I mean, a good example that I think, again, Daniela mentioned is we screen employees when they join us, right? If you're then allowed to screen employees on an ongoing basis, potentially you could start to see some of the pressures that your employees are going through, whether it be financial pressures, maybe they're in debt, maybe they're all the things that we look for when they join us the first time. But again, then we're hit with some of the kind of data privacy challenges there, right? I mean, we've got GDPR, which comes into play, early next year. So are we allowed to do some of the things that potentially you could do? But there is an opportunity to use, data. I don't know whether, within your organizations you're able to do this. But we think the primary area that analytics can help you is opportunity, definitely reduce it or identify weaknesses. But the second part is pressure, in terms of the pressure factor. But that one is controversial in some ways, because you might need access to data that either you're not allowed to access or actually you don't have within your organization. Okay, next slide, please. The next one. So what I wanted to talk about here in terms of statistics is, I think it is important that within your organization, within your sector, within your environment, you are aware of some of the kind of key statistics, right? So for instance, I don't know, you're working in a part of the world where, for instance, corruption is a big issue. I think you need to be aware of some of those things, just because I think maybe in terms of the focus, in terms of where you spend your time and your money, maybe that's the area you should be focusing on, right? I mean, again, I spoke about the UK. In fact, I'm here in the UK working in financial services, and actually the Office of National Statistics in the UK said last year there was a 40% uplift in terms of card fraud, right? So if I'm a profession working in that area, working in this country, and I'm not aware of that fact, I think it's actually, professional negligence. I think I should be aware so that I can then tailor my monitoring and my controls towards that area where there is potentially the biggest threat or the biggest exposure, right? So the first thing that I would think before you start thinking about analytics, before you start thinking about actually using automated ways or technology to help you with some of the monitoring, be aware of your environment, be aware of the sector that you're working in. What are the key, risk indicators in that area? What are the key concern areas in your particular space? And maybe those are the ones that you start by focusing on first. So one of the common statistics, again, this information is publicly available, is, and I think this probably applies to pretty much every single part of the world, is that I think the level of authority and how long you've been in an organization are significant factors that actually contribute to people performing or committing financial fraud. And I think some of the survey and the research in this area say that I think the longer that you're in an organization, I think the more likely you are to know in terms of the weaknesses that we will have in our control environments, because you're probably dealing with those things on a day-to-day basis, right? And you probably know how your way around. I mean, financial services, we spoke about, I think, UBS case where they lost billions of dollars. But the person who committed that actually knew exactly what to do. He knew all the systems. He'd been working with those systems on a day-to-day for a number of years. So he knew exactly where to go, and you knew that people wouldn't be able to find out for a period of time. So it's people that know their way around the system and the processes, right? Also, I think if you've been in the organization for a long time and you're senior, I think there's a tendency, and I think it's a human thing, that I think people are slightly hesitant to challenge you because they think, well, you're the specialist, you're the person that know, this organization, this environment better than anybody else. So, who am I? I just joined yesterday to come in and challenge you, right? So I think that's also another element. The other thing also is, I'm not saying by any means that I think we should only target people at the senior level or people that have been with the organization for a long time. Fraud can be committed by anyone in the organization. I think that is important. What I'm saying is that I think chances of somebody senior or somebody actually that's been with the organization for a long period of time, I think the chances are much higher, right? Also, I think the other thing that Daniela spoke about is, I think there's this, thing about, we trust him or we trust her, to borrow your phrase, Daniela, you said, trust him, I trust him or I trust her. I think I see that a lot, not just in public sector, but in private sector as well. Where we come from an analytics perspective is maybe we should change that to trust no one. In fact, there should be zero trust. The only thing that you should ever trust is trust your data in cases where your data, because the data cannot lie. Next slide, please. This slide is just talking about some of the types of fraud that normally okay. And again, same thing. I think Daniela touched on some of these. I think the biggest, area by far, the largest, and where we see the largest losses is financial statement fraud. I think we see this, both I think private and public sector. In the UK, we see this all the time. I think corruption is also, a concern. I mean, we operate in parts of the world where corruption is actually quite significant, or the chances or the opportunities are quite significant. So our controls, our focus in terms of when we do audit work actually does include corruption when we do audits in those areas, in those countries. And I mean, the third one is asset misappropriation. But what is interesting here, I mean, if you look at the bottom of that slide, it says, in cases where people have a strong control environment, I think it does have an impact in terms of the number of fraud incidents that you actually have. So you see less where the control environment is stronger, and I think that's intuitive. I mean, but also, I think if you add monitoring and some of the data techniques, I think that probably goes even lower as well, because we see that within our organization where people now know that we're monitoring on a regular basis, in some cases on a daily basis. So I think that just drives the human behavior that says, I know people are going to find out, so I'm probably not going to do what I wanted to do, right? Next slide. Again, I spoke about the control environment is a big contributor to reducing the number of fraud incidents, but also the other point here is that not all controls are equal, right? So when you have active controls versus passive control, actually there is a difference. I think if you've got much more active controls, I think the reduction is much wider, as opposed to where you've got passive controls. Of course, active controls are more expensive. You're going to have to spend much more money, kind of implementing some of those. And we think actually active controls, especially the first three, so we're talking about IT controls, we're talking about surveillance, monitoring, account reconciliation, those things could actually be done quite easily using analytics. What we do right now, for instance, is, I mean, we've got cases where in the procurement environment, we're buying things, we're buying stationery, we're buying, all sorts of things, pens and pencils, and pencils and all those kind of things that we buy in any organization. We've actually put in a monitoring program that says, not only are you, purchasing things that you're allowed to purchase within your approval limits, so the limits are being adhered to, but also people are not kind of, circumventing some of those controls by saying, actually, I'm going to split my order into two because I know my limit is 50. So I'm going to split, one order, one, order goes, it's 30 and the other one is 30, but they appear as two different orders. We are monitoring that, not just at an individual order or purchase level, but actually across everything that you've bought for the week, for the month, for the year. So we are able to see a much bigger picture using data and using analytics. Okay, next slide. Again, this is just talking about, I think, some of the challenges that we've got with not only are we dealing with a very complex IT environment, different tools, different systems, whether it be SAP, procurement system, finance system, there's so many things out there. There's so much data. I think some of the numbers that we've got, just a number of, non-cash transactions. I mean, there are billions every single day that we see in some cases. The number of customers, that we're dealing with, whether you're a public sector, if you're a government organization, you're dealing with so many, citizens that, passport office, for instance. I don't know how many people actually go to the passport office or request things. There's so many different things that happen. The challenge there is we don't think it's practically possible for us to actually continue to use some of the manual techniques. It's almost like trying to find a needle in a haystack. It's just not possible to find maybe that one transaction, maybe that one visit to the passport is the one which was fraudulent, how do I identify it within my data set? And obviously, I think this is where monitoring becomes important. Also, it's worth noting here that I think the fraudsters are actually becoming quite sophisticated. They're becoming quite IT, savvy as well, right? They know how to exploit the weaknesses. So I think this is where I think we've got a challenge as an industry, as a profession. How do we, because it's not enough anymore to find kind of fraudulent activities afterwards, after the fact. Actually, how do we keep up? How do we catch up? Because I think we're slightly behind at the moment. How do we catch up and stay ahead of the fraudsters? Because we need to. The next slide. So the next one. I've got a number of examples that I want to take you through. Where we're doing some interesting things. The industry, is also doing some interesting things as well. So the starting point I wanted to start with, there are two types of analytics that you can do. So the first one, and I think the easier one that most organizations deploy or employ the first time, is where I think, Daniela was mentioning things like, your red flags, things that you should be, kind of aware of, the control indicators that might tell you that, something is not quite right. You can, which is on the left-hand side, you can define some business logic or some business rules for you to find those exceptions within your data set. So it could be as simple as, I want to find out, maybe somebody that actually made a payment between, I don't know, December the 24th and January the 1st, because maybe your factory was closed at that point in time. So you didn't expect to actually be paying anybody, or you didn't expect a particular transaction. So you can build the business rules quite easily for you to find those exceptions. This is where people normally start. This is where we started, I think about 3 years ago, by just identifying those areas, those business rules that we know, that the experts know that work in the fraud area, and say, can we just code this? Can we just implement this within our core system so we can find out what are the things that potentially we might need to investigate? So the second one on the right hand side is much more interesting, because here, and I think this is where we have a challenge, because the rules that we applied yesterday might not be valid today, or they might not be able to capture all the exceptions today, because the fraudsters are clever people. They keep moving all the time, right? So how do I catch up? I think we can catch up with analytics, because the second part says, actually, you know what? I do not need rules at all. What I'm going to do is I'm going to profile all my data, all my payments, and see the things that stand out. So I'm looking for outliers. I'm looking for things that kind of stick out and say, what's going on here, right? It could be, I make a combination of, there's a payment, or a purchase requisition which was initiated, during the weekend. And normally, this doesn't happen, or this never happened before, or maybe it's happened once in a blue moon, right? To me, that's an exception that potentially you should look at. But not only was it initiated on the weekend, right? Maybe it actually violates a few other things as well. So you start to look at things like your toxic combinations. What are the things that you're concerned about? Use the data to then identify for you what those outliers are. And actually, one of the things that we're seeing is we're using that information, those outliers, to go back and challenge our business rules and say, do we actually have the right rules? Because in some cases, the design is not right. So, which is why actually our operational effectiveness is probably not as effective. So very, 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 very interesting there. The benefits of kind of doing some of these things and actually maybe automating some of these things, I think you have improved efficiency. I think, I'm not sure about your organizations, but we're faced with scenarios, public and private in the UK, whereby actually the audit department is strained. There's so much to do, not enough staff, not enough resources. How can we do more with less? I think that's where we are. So I think this is where I think you can introduce some efficiency, because we're actually finding ourselves executing audits quicker than we used to do in the past, because we're using some of this work. The data is telling us exactly where to go and focus. And actually, when we go and talk to the business, the conversations are very, very focused, because we're going there and saying, I've seen 5 exceptions in the last 2 months. Can you tell me what's happened here? Rather than a very open-ended conversation, right? We can repeat these tests. So we run some of these things. I mean, I spoke about, procurement. We've got a monitoring system that we run every month. So you can continuously repeat these things. You build it once and you run it multiple times. And also, I think coverage is a very important part, because if you do your traditional sampling, again, depending on your sampling methodology, you might say you take 10%, but 10% of, I don't know, 20,000, payments, maybe the one payment that you actually don't include in your sample is the one that makes all the difference. So here with analytics, you take the full population. It's not a partial population. Also, remember what happens with fraud. Normally you find out when it's too late, when the horse is left. But what you can actually do is you can, depending on if you're able to automate some of your early warning indicators, you could actually start to see things before they get worse. Because again, some of the things that we see is that someone might start by saying it could be, expenses. They inflate something by, 1 or 2 pounds initially, and they'll see, oh, I can actually get away with this. Maybe I increase it to, 20 the next day. Maybe, next month I increase it to 100, because now they're getting more and more confident, right? Again, we can use analytics to give you that early warning before things absolutely, get worse. We do this not only, within kind of our, kind of payments. We also do it with, traders. We do it with our analysts that are doing a lot of these things. What are they doing that actually maybe that should concern us? That we should probably, have a conversation with them or with their managers and say, this is not right. It needs to be stopped right now. Do we need to do more training in terms of just kind of instilling some of the cultural traits that we expect from every one of our staff? Next slide, please. So the first example that I've got is just expenses fraud. Again, here, the data sets that potentially you could use and that we are using is just expenses data. We also look at approvals and organizational structure or reporting structure. I think Daniela spoke about reporting structure. So not only kind of within the team, but also, maybe, for us, we're a global organization, so maybe globally, how is that when you raise your expense items, who does the approval, and actually, where are they in the organizational structure? So we do look at that. What we're looking for there, we're looking for indicators of maybe collusion between two people within the same team or the same organization to do things that they shouldn't be doing. Okay. Next slide. So this slide here is actually an extract. The only thing I did is I took out the names of the employees that we've got, and I took out the names of their managers as well. So it's a dashboard. I mean, Daniela, you spoke about a heat map, right? That's an example of a heat map that we use within Credit Suisse. So here, what we have is we've got employees on the left-hand side, and actually we've got their managers that are approving, those expense elements at the top. And what we've done is we've put a threshold that says, if the number of approvals per employee by a manager is beyond a certain number, we want to flag that as a red, because we don't expect the numbers to be that much, right? So I'm not suggesting by any means that all the things that are so-called are fraudulent activities, but I'm saying that I think that things that potentially we should be looking at, because they are above what we expect in a normal business as usual environment. You could add other indicators here as well, because you could make this as complicated as you want, depending again on your environment. You could say, not only the number, but I also want to see where other things have been violated. So it's a combination of different factors that you start to include within your dashboard. Next slide. The next example is cases where actually there is risk of accounts being used to launder money. And I think these are normally called mule accounts. So the data that we use here, we use client data, we use bank accounts, and we use transactions. So potentially, normally what happens is that you would see that I think, this normally happens, I think, in a financial institution. So if I want to, get money out of maybe a customer's account, I'm probably not going to move it into my account straight away. I might move it into another customer's account, maybe move it into 3 or 4 different customer accounts, and eventually it comes back to me into my account, because what I'm trying to do there is trying to hide the direct audit trail from customer A's account into my account. So I go through customer B's account, customer C, customer D, and eventually that comes back to me, right? So that's what we do as well. We also kind of track that to make sure that actually that money, it went to all these other accounts, didn't actually stay there very long. It didn't come back to this person. Something is not quite right, because if that was the final destination, why didn't it just come straight from account A, from customer, account A into my account, if it was a legitimate transaction? So we look for things like that as well. So again, using some of the tools that we use within analytics, again, I mean, this is a real example from one of our solutions. We use network analysis, and again, within the network analysis, you can quickly see the trace of that transaction. You can quickly trace, the trace of that money from one account to another. And again, the good thing about it is that you can kind of drill down and actually find the details in terms of exactly when those transactions actually happened. Next slide. Sorry, next slide. The next example is payroll fraud. I think every single organization, probably is faced with this challenge, and more so I think within public sector. And the data sets that we use, or the data we use here, we use employee data and we use payments data. And what we're looking for here is we're looking for ghost employees. We're looking for duplicate, bank details. So, maybe the same person be paid, they might appear, the names might be different because they've created a ghost, employee, but actually the money is ending up in the same bank account. So again, very straightforward to build and actually monitor. Next slide. So here, I think on this slide here, this again this is a visual in terms of actually one of our dashboards, what it looks like. But not only do you see there are cases where multiple payments have happened, they've gone to the same employee. So it could be because they've created a ghost employee, but actually the bank details are still the same. So you'd see in that case, we would say actually anything where our payroll, the amount is ending up in the same, it's more than one times in the same bank account, we want to flag that, because that cannot be right. I mean, especially if you are auditing a large organization, it's quite difficult to do it manually, because you might have maybe thousands of employees. I'm not saying it's not impossible. You probably could do it manually. We could do it maybe using Excel, but we just find this is actually quite easier. You build it once and actually you can use it multiple times. You can easily find where there are cases of violations, where the business rule that you built is actually not being adhered to very, very, very easily. The other thing also, you can trend it over time as well to see whether that's the case. Okay. Next slide. I think what is really important is within analytics and through the use of analytics, if you can identify, I think, what we call the toxic combinations, which is that combination of things or factors that give you the highest concern, and maybe you start to monitor that as a combination. So, for instance, I think some of the examples we've got on the screen, or the screen is back, is where you've got an account manager requesting, an account, but actually, maybe they're the same manager that actually has to authorize that account creation as well. So, there is no segregation of duties there. But also, maybe you also look at maybe the address that's been used on that account is actually maybe, the managers, the same manager's address or one of their employees' address. So you can start to see that combination potentially is actually going to end up in a transaction which is not genuine. So you need to kind of work out that combination, that toxic combination of the key things that you're concerned about together that you might want to monitor using analytics. Yeah. Next slide. The next example, uses, because remember I spoke about two types of analytics, right? The first one being you define your rules. The second one is, I think, you use analytics to tell you what the outliers are. So this example is whereby it tells you what the outliers are without you not necessarily having to define the business rules. So what we have here is, very, very simple example whereby we're using timestamp. It could be a date stamp. It's up to you. It's up to you. So this is kind of, information or data whereby the transactions have got a time or assigned a time and assigned a date, right? So the data set that we've got in this particular case, we've got employee data, we've got building access, so people that are swiping in to come into our building. I'm not sure whether this applies to your organization, but I'm assuming most organizations today you have to swipe in, to get into the building. And also we have transactions data. It could be payments, it could be procurement, whatever it is, right? And the indicators here, what we're looking for is we're looking for outliers. That's what we're looking for. So if you go to the next slide. So again, this is a heat map that we've got. Unfortunately, it's a little bit smaller, so you probably can't see the details. So it's a heat map for a number of employees within organizations. And again, because we're global, and basically what I was looking for there is I was looking for transactions that happened outside our trading hours. So there are rules within Credit Suisse that say if you're a trader in London, you can do your trades between 8 and maybe about 7:30, right? I'm not quite, those are not the specific times. But then if we start to see trades that are being initiated or executed after 7:30 or before 8, that can be right. So this is what this does. It just gives me the outliers straight away. So I can then look at those employees and say, well, actually, why is this transactions done within this time frame? At the bottom of the screen, I've got my hours. So right from midnight all the way up to, the next midnight. So it's a 24-hour horizontal access. And all I'm doing is I'm just looking. So if I'm in New York, my time scales will be slightly different. I'll be looking at a different, time range. If I'm in London, I'll probably look at a slightly different time range and say, I'm only going to focus on the things that I think should not be happening during this time, right? Again, that could be the scope of your audit. In fact, that's what we're actually seeing, in a lot of these. But actually, it doesn't need to wait until the audit is done. You could actually just start investigating, and if there's something that's actually been done, you can get straight to the details of the transactions. And then if you need to raise issues, you need to raise issues. Okay. Next slide. Again, this one is another one where there are no business rules. I'm just purely using analytics to tell me or to direct me where I should spend my time doing some further investigations. And I think this one is looking at, again, transactional volumes. Again, the data types or data sets I could use, again, employee data, I could use, building access in this case. I could also use the same, transactions data as well. But what I'm looking for here now is I'm trying to distinguish between employees that are initiating their own transactions or their own trades versus the ones that, trades that are initiated by a client. Because within the bank, I can buy my own stocks, just for me, but I can also buy it on behalf of another organization or one of my other customers. If we go to the next slide. So one of the things here, because I can buy things for myself, but I can also buy things for my customers. And this is not just an issue, that we are faced with within financial services, but I think even public sector as well. I think is the same. If you're buying, you're placing a big order on a company that's listed, and actually potentially you can work out the implications of your order on the stock price. You could actually start to do some, I think, what we call front running, right? So I know that my client, because they've told me they're going to come in and, place a big order tomorrow. But actually today, what I do, and I go and buy the shares of that company because I know the price is going to go up as a result of the order that my client is going to come in and place tomorrow, right? So we do look at some of that as well. So we look at dates. So I look at maybe 5 days before that big client order came in and maybe 5 days afterwards to see if there's anything that's suspicious within that time range. And again, to try and do it manually is actually quite difficult. I use analytics to tell me the heat map and the areas potentially that I should be concerned. So I'm seeing, for instance, the things that are circled, big orders being placed by people within my organization just ahead or just before a big client order comes in. I need to know why those orders were placed. What's going on there, right? Again, you've got to be careful here because it's not every single time that they place, the employee will place their own orders. I'm talking about big orders. They might place small orders, but a number of them. So you might need to aggregate all the orders that have been placed over the last, few hours or the last few days to get that full picture. But again, that can be done quite easily, through analytics. The next example that I've got, again, same thing, no business rules here. I'm just using purely analytics. I'm looking for outliers for things that I might want to look at. And this one is looking at procurement, right? Again, this is whether private or public sector, the issues are still the same. The data that I might want to look at, I might want to combine the supply data, and I want to look at my payments, so my suppliers and my payments. That's what the data says I need to be able to do this properly. And the indicators that I'm after, cases where we're inflating numbers or supplier payment details have been changed either before or after a particular transaction was done, right? And also, I think, this is where sometimes I think we say, if a supplier changes their bank details, actually, the controls, the manual controls are normally, is there a letter that says actually, who authorized it, where did it come from, all those things. They're all fine, but what I'm saying now is that I want to monitor that on a much, much more regular basis. In fact, almost close to real time, I should be able to do that. Because normally what happens is, if someone is putting in a fraudulent payment, and they want to pretend like that payment is going to a, approved supplier, they'll put in the payment transaction or change the supplier payment details, put in their payments, and then actually, execute, right? So it appears as if you paid one of your regular suppliers, but actually, if you look under you open the box, the payment is actually going to an account number which does not belong to the supplier. So that's what we're looking for there. So this is just, very, very quickly showing, the number of times the payment details of a supplier have changed over time. And also on the right-hand side, you see there, it actually saying, the vertical lines are saying the dates when I made payment to that supplier. And I'm looking for areas where the changes to the account numbers were done just before a payment went out. So that combination for me is important. Why were those details changed? I might want to see, were they approved properly? I might actually want to see whether the bank details were changed soon after the payment went out as well. So it's kind of those three things that might actually point me to, maybe a decision that says something is not quite right here. So I think what I'm trying to say through all these examples is, I know as auditors we've relied on judgment, we've relied on our experience, but I'm not sure whether that's enough anymore, given I think the challenges that we face today. There's just so much information, so much data, so many of these things coming at us. The fraudsters are getting cleverer, they're using different techniques. How can we make sure that we stay in touch, or in some cases actually maybe stay ahead of them? And I think we need some help. I think what I wanted to just do here is there's some other techniques that we can use to do this. Benford's law is a good one. And I think we use that a lot to find amounts, and especially where numbers are concerned, where things are not quite right. We're also starting to venture into machine learning as well. Very, very, very interesting. I'm actually sitting in front of our group audit committee to talk about our use of machine learning, because we've got some real examples where we've used machine learning in some cases actually to challenge some of the things that the business are doing. I'll give you an example. For instance, within our AML space, what we have is, if there's an AML exception, it goes to a case worker team. So they work through all the cases, right, to identify whether it's a true exception or actually it's a false exception, right? If it's a true exception, obviously they need to go ahead and do some more work. And actually what we're doing now is training, using machine learning, and actually training our own internal audit machine to be able to then actually go through all the things that have been processed by the case worker team to see whether the way they made the wrong decision. And actually, we're finding a lot of that. So wrong decision where they said it's not an issue, we don't need to investigate. Actually, they are very, very, very important for us, because it's an AML case, an AML violation that the caseworker decided actually, no, it's fine. We can actually just onboard this customer without any issues. But actually, that customer has an issue. Regulators find out, then we're in serious, serious trouble. So I don't think we can trust them anymore. We're gonna have to use machines and data to try and help us to do a good job. Next slide. One of the things I wanted to talk about is again, what does this mean for us, as individuals that work within this industry, as a profession, and actually, how can we bring the biggest impact within? How can we bring the biggest impact, apologies for that, within to our stakeholders, to the business, especially given the fact that a lot of businesses now are using data and they're using analytics already, right? It's interesting because I was in New York a couple of weeks ago, and we were talking to one of our business areas, and they've actually automated their front to back. So one of their reconciliation processes is now automated. So they have a machine, again, as part of machine learning, that tells them exactly the decision that they need to make, whether it's they should, those two items are properly reconciled or actually they're not. There's a machine that tells them that. When we go along and do that audit as auditors, because that process is already automated, it's using data analytics, it's using machine learning, how do we audit it if we don't know these things? Right. So I think that's probably the challenge that we've got. And also, I think what we're finding out is that within internal audit, it is difficult to attract people that have good data analytics skills. But also, I think you cannot just bring people from the outside with good analytic skills. You also need people that understand risk management, that understand, controls, that understand all these other things. So you almost need a combination of, analytics and risk and auditing and all those things, right, in one person. Unfortunately, that person doesn't quite exist. So this is where I think what we're seeing in the UK is lots of training. In fact, what I did is I kind of challenged the Institute of Internal Auditors and they say, if I look at your training program, actually your certification program, it doesn't even touch on things like mathematics and statistics, which are so fundamental going forward. Maybe we need to go back and look at some of these things and see what we need to do going forward. If you could move to I think you're already there in the next slide. So in terms of, I think, the auditor of the future, I think what we think, sorry, yeah, that slide, that's correct. We think you need that combination. It's not enough anymore to have, the audit skills, the risk management is not enough anymore. You're dealing with so much data, you need an appreciation of data. One of the things that we're doing within Credit Suisse, and actually we're introducing that, I think, to the Institute as well, is introduce a basic or data foundation course whereby people can actually just, what is data? What does it mean? I think we take it for granted that people understand what it means, but they don't. So we need to bring everybody up to speed. Otherwise, we're never going to become effective, right? And I think after that, then we train people, how can you then actually use some of these tools, right? Because it's not good enough to bring in experts, because I see organizations doing this. They bring in data experts, analytics experts to build a lot of the heat maps, that Daniela was talking about. But you need the business auditor to actually understand what it means. They're the people that are going to sit in front of the business stakeholder and explain those things, explain all these things. They need to understand, they need to appreciate, they need to be able to use all these things going forward. Next slide. And actually, how do we use it? After we know we've got all the skills, how do we use analytics going forward? We're using analytics for risk assessment, going forward, to actually tell us where, even in terms of planning, we're doing our planning for 2018, at the moment, we're using analytics to tell us potentially areas where, our risk is heightened by a number of different things. It could be events in the world, in different parts of the world that we operate in. It could be because the strategy that we're doing is changing. We're moving into a slightly different area, and some of those regions have got much more challenging issues. That's exactly what we're using analytics to tell us, to try and help us. Because the good thing about analytics is that you can feed it all the historical information and say, actually, based on what's happened in the last 6 months, 12 months, 2 years, potentially, where do you think, what do you think potentially could be happening, in the next 6 months, in the next 12 months, right? Because as they say that history is a good predictor of the future. So we're trying to use all the data that we've got to try and help us identify areas where we need to spend time in the future. That's what we're trying to do at the moment. There's some key resources. I think there's an Institute of Internal Auditors LinkedIn page. I think there's a number of articles. Some of them have written some of those articles. There are other contributors as well. There's actually a fraud analytics group, which is on LinkedIn as well, that share information. You can ask questions. There are articles. They point you to different things. So again, if you're interested, I think you probably can join, some of those things. I think there's so many other materials that are available online as well. Okay. We'll probably just pause now and stop now and see whether there are any questions.
Thank you very much, Stephan, for a very informative and interesting presentation. I would like to open up the floor for questions. Please, who is going first, just unmute the microphone. Before people are being prepared for the question, I have a question, and thanks a lot for this. Is very interesting approach and very clear vision that is trust no one. Actually, in the same, for example, PenPal, Internal Audit Committee of Practice, we have like slogan trust but verify. Now we have a new one, trust no one and trust only data, which is a real-time data, and try to work with full population and using network analysis and data analytics. And this is quite an interesting approach. The point here is that actually we have the fraud risk and fraud activity happening in large and small organizations, and in all different contexts. From your experience, is there any certain organizations or sectors which are more susceptible to the risks of the fraud risks, and what will be the remedial actions which you would propose from the data analytics perspective? What are the low-hanging fruits which the internal auditors in the public sector could address in those sectors or in those organizations?
Yeah, I think that's a very interesting question, because I think within public sector there are some things that we see taking place over and the same things from a fraud perspective that happen all the time. I think one of them I think we spoke about is procurement fraud. We spoke about payroll fraud, right? And actually what's quite interesting, I mean, I was reading an EY report quite recently that says external audit is not effective when it comes to identifying these things. And I think part of the reason for that is they come once a year, right? For and even if they come once a year, they might not look at fraud. Maybe that's not part of the scope of work that they're looking at. They're looking at other things, right? So then it means the people within organizations that are doing all these illegal things have got much more time to do them, right? Which is why we're saying, I think if you use analytics, to be fair, it's actually quite easy to do it for things like your procurement and your payment and your payroll. They're actually quite simple things to do. I think the first thing is, if you've got access to the data, which you should have anyway as internal auditors, I think that mandate should give you that access to that data. You could even do this analytics without necessarily using any expensive tools, any of these sophisticated tools. I think the latest versions of Excel can actually help you do this quite quickly. So this is not about you spending a huge investment for you to do this. I know organizations, because I mean the institute in the UK looks after every single internal audit function, small, large, public sector, private sector, and there are people that will come to us and say, I've only got 2 auditors in my team. That's the size of the audit team. What am I supposed to do with all this? But this is where it even becomes important that you build these tools. You might need some external help to build that Excel dashboard, but actually once you build it once, that means you can monitor it, even if you've got 2 people in your team on a much more regular basis. So I would say, payroll, procurement, those things, but you should know that in your organizations. Again, that's why I said at the very beginning, know your environment, know your sector, know your organization. What are the things that really matter? Where are the areas where you've got the biggest control weaknesses? Maybe you start with those and actually use very simple tools to do this.
Thank you, Stephan. I would like to go back to the participants. Questions, please. Just unmute. You need to press the unmute button so we can hear. This is about video conferences as well as yeah, please.
Hi from Turkey, and thanks for the organizing committee and thanks for the speakers. This may be more than a question. I want to add something. Today we have talked about more about procurement activities and some financial fraud activities. As you well know, if you are talking about numbers, if you can ability or if you can have some chance to convert some data to numbers, yes, you are right. You can identify some exemptions and some fraud activities. But this is correct for procurement activities or some payment, payrolls, something like that. But what if we are just dealing with some construction audit activities. In many of the auditors in Turkey are deal with construction sector, and there is no payment. There are some kind of construction activities. So as you well know, we have time limitations to complete audit. So we have no chance to convert some data to numbers. That makes very hard us to identify exemptions. May I ask the speakers, is he or are you have any suggestion about this? Thank you so much.
Thank you for a very good question, Stephen. Daniela?
Yeah, I think construction is interesting because I mean we have the same challenge in the UK, right? Because yes, you might even in cases where you have a payment system, but actually people are not paid through the payment system; they're paid cash, and you have no idea where the money actually went to. One of the things that we're doing, I think we're doing in a number of countries, is it's not just about the payments data. We're also looking at things like email. We've had challenges, for instance, in Russia, whereby actually corruption is a challenge that we are faced, and that data or that information does not sit in a payment system. So I think you have to be a little bit more creative in terms of do you look at emails? I'm assuming the construction company and the contractors, they must be communicating in one way or the other. So maybe they're communicating through emails or phone calls, but it makes it quite difficult in that case because it's not so easy to analyze email communication or phone calls. But in that case, maybe I think, again, you might want to use maybe, the traditional sampling methodology, but actually you're clever in terms of the way that you sample. Maybe you target, I think, the biggest kind of constructor, or you're the biggest contractor on that construction project. Maybe that's what you do, and you look at a number of transactions that are happening. But I can understand, I think, what you're saying. We are slightly lucky because we have got tools that actually do analyze emails. We monitor not just what people are saying, because as you know, financial services has been hit with, on the forex scandals. We actually even monitor what people say and whether they're actually in line with the cultures that we expect. So we've got some of those tools already in place. But I think in your case, I'm not so sure whether you even have the data to look at, or this is just payments that someone put money in someone's pocket, and there's no record of that transaction ever happening. So it is quite difficult to tell you exactly what to do.
Thank you. Daniela, would you like to add? Please unmute microphone, please, Daniela.
Do you hear me now? Me now? So I use constantly examples from procurement area. Is true because it's a high risk area in the public sector, and I wanted to have such a nice story about. But of course, for example, if you think about the red flags, this like the undue influence, the conflict of interest, various kinds of fraud risks will be quite similar in all areas. So above having the necessary expertise as a team, which is and relates to the chief audit executive, this task. So you may have experts from outside your internal audit function. Of course, you have to use the 4 eyes principle, use the skepticism, but also you have to look at the agreement on the contracts. You have to look at the budget to be realistic, and the terms of the contracts to be respected, and you will see of course, if the segregation of duties is not correct. So you can apply in the specific construction area the usually, let's say, way you conduct every single engagement. So you should keep in mind that audit bottom-up insights complement efficiently the top-down views from the executives. And also what I would like to add here, thinking about the financial statements. So if you look at the contracting construction area, including the process, the building construction, the hard work, of course you need to pay on-site visits, and you need to look at the separation of financial duties and supervision of the public officials that are the beneficiaries, I understand, and in the constructors, so the service provider. So I think this way you can handle the situation.
Thank you. And the point here is that even in construction contracts, as speaker says, you need to look to the different type of data. For example, timing of implementation of the contract compared to similar other contracts. Even those could be like staff to be involved in this particular, because large contractors of the government, they work with different government agencies, so you can connect to see whether the same staff is engaged in other contracts as in parallel, simultaneously. So try using like data analytics, even if it's not only numbers.
Hello, do you hear us, Arman?
Try to use to connect to
Arman, it looks like.
Yeah.
Arman, sorry to interrupt. It looks like the connection was lost for a few seconds there, so it may have been that we missed part of your inputs. So maybe you want to go back a little bit and repeat. Sorry about that.
Yes, thank you. So I was just reflecting on the speaker's point here, is that even if there is there is no numbers or quantitative data available, let's try to quantify the qualitative information. For example, if the same construction contract, try to use the period which was used by the contractor to implement this activity and compare with similar scale construction contracts done in the past. So if it is shorter period, this will be in the risk flag. Or usually the larger construction company which work with the government, they work in parallel few projects, try to see whether the same stuff is used, I mean using the data analytics, if there is an overlap in engineers, in staffing. So that would give another indicator in flag whether they use this information and whether there is a risk of potential fraud. I think Kalina, you are losing you. Kalina, can you follow? Kalina?
Yes, I hear you, Arman. We hear you. It was a little bit lost connection before, but now it is good. So we hear you well.
Thank you, Kalina. Any other questions? Final question we'd like to have.
If I may speak.
Yes, Tirana, please.
Can you hear us?
Yes, we hear you. Please,
okay.
Please go ahead.
We don't have a particular question. I just wanted to thank you first, the organizers and the presenters, for this interesting topic that you chose today to present to us. It is, I mean, our internal control systems, apparently they do not have a direct focus on fraud, but it became even clearer now that even from the data presented from the presentation that more attention should be paid to these issues as well. So we hope that in the near future we'll continue again on these interesting topics. Thank you.
Thank you, Ritan. Any other question?
Yes, from Serbia.
Yes, Les, please.
Thank you. We have a little discussion here, and in fact, our question is, what is the cut-off line between internal auditors and investigators? Which is the level of collected evidences, I mean proof to the investigators there is as our fraud indicators, if you understand me.
Yes, that's the question. Yes, what is the difference? Because if the internal auditors are engaged heavily, or they are expected to be more engaged in the investigation, what is the line of difference there, forensic from the internal audit function?
That's it. Thank you.
Yep. Thank you. Any other question? Let's, if there is any other question, let's collect and then speakers will respond.
Arman?
Yes.
Hi, Arman. Hi from Turkey again. We wonder, we have just talked about, isn't that point which the dear speaker explained us about makes the internal audit function converts into some kind of inspection? I think we should be aware of that. Because that kind of activities, well, maybe strayed us to some kind of inspection activities. Thank you.
Thank you. Very good question connected to the previous one as well. So what is the borderline and engagement in the fraud risk analysis and the fraud planning, risk planning, identification? Does it end up with more inspection function? Any final question? Okay, then please, Stephan, would you like to go first?
Which question do you want to?
Yeah, the question is about what is the borderline between internal audit and investigation, as there is more and more emphasis on the fraud investigation or fraud risk identification planning. So the internal auditors will not spend more time and resources on investigation and fraud identification, and then there is no risk of internal auditors becoming or taking over the role and the function of the investigators or forensic auditing.
Yeah, I think, this is, I think, dependent on the organization. We've actually had a few cases where internal audit together with compliance, they've actually been core investigators on fraudulent cases within the bank. And actually there are cases also where we've invited an external investigator to come and do the work. The cases, most of the cases, for us, where we've actually done the investigation is internal audit, because we're required to do that by the regulator. So again, depending on your specific environment, but I think it applies, equally the same within public sector as well, right? If you are asked to do that, then obviously you have to do it. Even in cases where we didn't have the resources and the skills, we would actually then go and employ maybe an accounting firm to come and help us with the investigation. But actually, the investigation was done under our guidance. What we then use that information to do is look at our controls. Well, actually look at our audit plan to see whether maybe we should enhance our audit plan to make sure that next time we're able to identify these things before, an external party then comes in and finds out that actually maybe not only our controls not good enough, but actually our audit program is not good enough as well. So yes, we've seen cases where we both investigate, but we are told by the audit committee to do it, maybe in some cases by the regulator to do it, and we don't really have a choice.
Thank you, Stephan. Daniela, would you like to go ahead? Please unmute. Daniela, please unmute. Yes.
Do you hear me now?
Yeah.
Okay. So if the question, or one of the two questions, they are interrelated anyway, was where is the border and why do we have to investigate the fraud? So if we look at the definition of internal auditing, so we provide assurance over the governance, risk management, internal control system effectiveness. We provide also advice. We make recommendations to improve also or to correct the weaknesses of the internal control system. So those activities also are the audit universe. Also encompass the fraud activities even, and our management is responsible for establishing and monitor the effective controls. In our case, to deter and to detect the fraud, but our responsibility is not to take the responsibility of the management, but we are required to evaluate the risk of fraud. So we have to run a fraud risk assessment for every single engagement we perform. So we have to be aware that fraud can be present there. So if we identify fraud elements, we need to document our conclusions, and based on this to provide our recommendations. So the borderline is where we do our job well in the right way. So we have to have strong supporting work papers, audit work papers, to support our conclusions, because if, let's say, there is a serious case of fraud, they will go to court, and then we need to stand with our issues. That's what I want to say for this moment.
Thank you, Daniela. That is, as I understand, your and Stephan's point is that internal auditor will need to move from the passive role to more active role. It's required the standard, it's required the good practices, and we need to start to look into more carefully into the risk, fraud risk factors. As for regarding investigation, or the borderline is when you identify and document, at least in the public sector, there could be other bodies, forensic and financial inspection, which could be more, and that will be the bodies who will investigate it further and then take it to the further instances, could report or other instances, depending on the public sector context. Thank you very much, dear colleagues. Kalina, do you have anything to add from your side before moving to the final session, the closing remarks?
Thank you, Arman. Just to emphasize from our side, Piotr and me enjoyed the presentations a lot. We learned a lot about the focus on fraud in the public sector and what internal auditors are doing, specifically some examples and data analytics. So I would just like to thank the speakers for the excellent presentations, and also thank all of the participants for their questions and for their interest. Over to you, Arman.
Thank you, Kalina. I would like to join Kalina in thanking Daniela and Stephan for very good and very detailed presentation, which gives us a lot of information on the auditor's role in fraud, and particularly including data analytics, how we can use it. I would like to also indicate that this virtual workshop was organized thanks to idea coming from Kalina, who just proposed to make it and to reach out to to all our internal audit TOT members, as well as our broader interested stakeholders and participants who would like to join. And thanks again, yes, to Piotr for helping in the background and helping us to deliver this workshop. And apparently, thank you to all participants and for your active participation. This distance learning event is recorded, and the recording will be available on our website in due course, and we will inform all the participants accordingly. I would like to use this opportunity to thank all the participants for their participation and responses provided to our public sector focus on fraud survey. This is very informative. Now we're summarizing your inputs, and we will be contributing. We will be summarizing those in the good practice paper, and that will be excellent contribution to that paper. We'll be happy to share it with all the participants and COP community of practice, the results. Those are very interesting, as we have very quick glance for those. Please also, for further information, please visit the CFRR homepage and as well as the PEMPAL Internal Audit Community of Practice websites. Thanks a lot for all participants, speakers, and organizers for joining this event and making this happen. And thank you and goodbye.